Have you ever wondered whether your life insurance policy should be part of your living trust, or should you just list your loved ones like your spouse and your kids as the beneficiaries and call it a day? In this video, I'm going to tackle this important question and to provide you with clarity and give you guidance so that you can be well equipped to make the best decision for your family's future and to decide whether to add your life insurance into your living trust. But before we dive in, if you haven't already, be sure to subscribe to our YouTube channel. Hit that notification bell so you never miss one of our upcoming videos filled with free estate planning tips. And by the way, my name is Edmund Yan. I am a living trust lawyer. I've helped hundreds of families and I've taught over 3,000 people how to do it themselves, and I'm excited to share my tips and tricks with you today. If you own a house and you want to learn the entire process of how to make a living trust yourself without hiring a lawyer, check out my free trust class at freetrustclass.com. The link is on the bottom of this video. And a really quick legal disclaimer, I'm not your attorney. I'm not giving you any legal advice today. Okay, everything is just for your general information. If you have any legal questions, please talk to an attorney in your state. So here are the questions that we're going to be talking about today. What are the advantages and disadvantages of putting life insurance in a living trust? Should I even get life insurance? What kind of life insurance should I get? And where can I get life insurance? And so another disclaimer, I'm not a life insurance agent. I'm not a financial advisor. So I'm not giving you any financial advice today. If you have any questions about life insurance, you should definitely talk to a life insurance agent or a financial advisor. So the first question is, what are the advantages and disadvantages of putting life insurance in a living trust? So let's start with the advantages. If you put life insurance in a living trust, when I say put life insurance in a living trust, what I'm really saying is who's going to be the beneficiary of your life insurance policy? Is it the living trust, or is it specific individuals that you want to give the life insurance to? So whenever you open up a new insurance policy, they're going to ask you who's going to receive your insurance policy when you pass away. And so you would write their names as the primary. So for example, you can have one person as the primary, like your spouse or your kids. You can have multiple people, and you can say this person gets 50%, that person gets 20%, and so forth. And then you can also put contingent beneficiaries. In case all of your primary beneficiaries pass away, who's going to be the contingent to receive your insurance proceeds when you pass away? So when I'm talking about putting life insurance into your living trust, what I'm really saying is, should you put your trust as a primary beneficiary of your life insurance? And if you do, what are the advantages? Okay, so the number one advantage when you put your trust as a beneficiary of your life insurance is that you get more control over how your beneficiaries spend the money. For example, if you put your kids as the beneficiaries and you put their names on the beneficiary forms, when you pass away, once they get the death certificate, they're going to bring the death certificate to the life insurance company, and then the life insurance company is going to issue them a check for the entire amount. And so your kids could end up with hundreds of thousands or millions of dollars overnight. And the question is, do you trust your kids to be able to manage those funds and not blow it all in a matter of days or months? And so if you do not trust your children to handle that amount of money, maybe they've never handled that much money before, and you're concerned that they might spend it all. And so if you are concerned about that, one option you have is not to put them as the beneficiaries, but you could put your living trust as the beneficiary of your life insurance. So when you pass away, the trustee of the trust is the person who manages the trust when you pass away and distribute assets according to your wishes that's written in your trust. That person is going to take the money, put it into a trust bank account for the benefit of your beneficiaries. So your trust could say, all my life insurance proceeds will go to these specific people. However, I don't want my trustee to hand out a lump sum to them right away. I want my trustee to hold on to the money, invest it, and give it whenever the beneficiaries need it. And it has to be for a legitimate reason, like their health care, their education, food, shelter, clothing when they are out of a job. And so you can allow the trustee to decide how to give money out to the beneficiaries so that there's more control and there's a reduced chance that they're going to squander their inheritance. So that's the number one advantage of putting your life insurance into your living trust. A second advantage is that the proceeds can be used to pay for funeral expenses, pay off your mortgage, and other debt that you might have. And so generally speaking, when you name a beneficiary, for example, if you put your kids as the beneficiary of life insurance, that money is now theirs. And so if you have any funeral expenses, if you have any mortgages that you want to be paid off before your beneficiaries receive the house, who knows if they're going to use that money for those purposes. And there's also other debts that you might have, like medical bills. And so if you want your life insurance to pay for all of that so that your kids could get a mortgage-free property, if you want to make sure that your kids put that money into the mortgage and not spend it on nice cars, so that they get a mortgage, a debt-free house that's completely paid off, then you want to put the life insurance money into your trust, and your trust should specifically say that the life insurance money must be used to pay off the mortgage, and then the house could be given to your children. So you can set it up that way if you like. That's one of the other advantages of putting life insurance into your trust. Another advantage is to provide for special needs beneficiaries. If you have a beneficiary that is on Medicaid or Medi-Cal or any government support, your life insurance that you give them, the proceeds, could disqualify them from continuing to receive the government benefits, because now they're going to have $100,000 or even $1 million in their possession, and the rules are to continue to receive government support. Most people cannot have an amount that exceeds the limit that's set forth in that government program. And so if you want to continue to provide for special needs beneficiaries, then you want to make sure you set up a special needs trust within your trust to be able to manage the life insurance cash for your beneficiaries so that they can continue to receive government support. So that's another reason why you should put life insurance into your living trust. Now, what are the disadvantages? One disadvantage is that money may be subject to your creditor's claims. So if you have really high medical bills and your heirs are not able to negotiate it down, and the medical companies go after your estate, then the life insurance money could be used to pay off the medical debt. And so that's one of the problems. Also, one of the other disadvantages is the money might take longer to go to your beneficiaries. So when a trust is a beneficiary, first of all, the life insurance companies will do more due diligence. They're going to need a copy, not just your death certificate, they're going to need a copy of the trust to make sure that the beneficiaries are in fact listed in your trust. And so there's going to be a process for the life insurance company's legal department to look into the trust to make sure that the beneficiaries are who they say they are, and that it's written in the trust. And also the trustee needs to go and get the money. Okay, that's the most important thing. In order for the trustee to get the money, they're gonna need the insurance company is going to need proof that that person is the trustee. And so the trustee will probably need to hire an attorney to draft some documents to say that I'm the trustee and I'm going to take the money on behalf of the beneficiaries. And not only that, the trustee would have to go to a bank, open up a trust account, and deposit that money into a trust account. So it does take longer for your beneficiaries to receive the money if it's inherited through the trust. Plus, your trust might say the beneficiaries don't get it right away. And so that might be something that you want, like what we talked about, so the beneficiaries don't don't squander their inheritance. And so that might not be a disadvantage to you. You might not want your beneficiaries to get everything right away anyway, so that might not be too bad for your situation. Another disadvantage is increases in the cost of trust administration. Trust administration is the process of administering your trust, making sure that the trustee follows your instructions to distribute or hold on to assets for you. And so having life insurance in your trust might be an added cost. So those are the disadvantages and advantages of setting up the trust as the beneficiary of your life insurance. Now, whether or not the life insurance beneficiary should be the trust or the individuals, it really depends on so many factors. And so please do your research, compare the advantages and disadvantages, and then make your best decision for your family. Another question you might have is, should I even get life insurance? So what are some of the reasons why you need life insurance? Not everybody needs life insurance. So for example, if all your kids are grown up and you don't need to provide for them, and you and your spouse are taken care of financially, you don't need life insurance. However, there are certain scenarios where life insurance does matter when it comes to estate planning. For example, you might want to provide for your spouse to maintain their current lifestyle. So especially in a situation where a spouse dies young, because as a young couple, or even a couple in their 40s and 50s and 60s, you have a double income, right? You have the spouse, both spouses working. Now the question is, what happens if one spouse dies? Is the surviving spouse going to have enough money off of their salary and savings and investments to pay, for example, the mortgage, the expenses that you both have? If the answer is no, then you might want to consider getting life insurance to cover that in case one spouse dies and there's no longer going to be a second income. Or if there's only one income in the family, let's say the husband or the wife is the one who works and the other spouse stays home to take care of the kids, what if the breadwinner dies? Now there's zero income, and it's going to take some time for the surviving spouse to get back to work. So in that scenario, you need life insurance to continue to sustain the family, so that surviving spouse could have at least 6 to 12 months to get back on track in terms of work. Okay, so those are some of the scenarios. Another scenario is to provide for your minor children, right? Our kids can't work, especially when they're infants or 2, 5, 6 years old, or even 10 years old. And so if you want to provide for them, for their well-being until they're 18, and also beyond the age of 18, if you want to provide for them for their college tuition, down payment on their first house, if you want to have those dreams for your children and provide for them, then you want to make sure you have life insurance, so that in case you do pass away early and your kids are still minors, your kids will have a nice financial backup and cash to live on for whatever they need. Okay, so another scenario would be to pay off debt, mortgage. A lot of my clients want their mortgages to be paid off for their surviving spouse or their children if they pass away. Medical bills, credit cards. If you have credit cards, you want to make sure that that's paid off as well when you pass away. So paying off debt is another reason why you should get life insurance. Also, providing for a charitable cause. If you want to provide for a charity, you can use life insurance if you don't want to use your own money to provide for your charitable cause. So those are some of the reasons why you should get life insurance as part of your estate plan. So what kind of life insurance should you get? There's so many different types. Okay, I'm going to list some of the common types. There's the term life insurance, which is the best for most people. And then there's also the whole life, universal life, variable life, permanent life, and many more. In this video, I'm going to focus on term life. For most people, term life is the best best type of insurance because it's simple and predictable. For example, you can buy a $500,000 or a $1 million policy for 20 or 30 years of your life, or even 10 years of your life. And if you pass away within that time frame, the life insurance company is going to give your family, the beneficiary, exactly that amount. Okay, so it's very simple, very predictable, very clear as to what you get. And that's usually what people should have, because you have a set amount that you can plan for with your spouse. For example, you can say, hey, honey, we should get a $1 million policy because, based on our current living standards, if I did pass away before the kids grow up, then you'll have this much money to live for this amount of time. So it's very predictable and it's very affordable, especially when you're young. Even your 40s and 50s, term life insurance is relatively inexpensive to get. Okay, so term life insurance is the way to go when it comes to life insurance for estate planning. Now, there are certain people who could benefit from whole life insurance, universal life insurance, and variable life and permanent life insurance. But those types of life insurance products, a lot of times the fees that you pay the life insurance company and the insurance agent outweighs the benefits of having those creative types of life insurance. There's the maintenance fees. There's a lot of terms and conditions that you have to know about. For example, a whole life insurance policy, it does give you cash value. For example, it's like an investment vehicle. You get the life insurance piece, like a term life insurance. If you die, you get X amount of money. But the money you invest in it, it's going to be used to invest in the stock market. Plus, it could be tax-deferred savings accounts that you can set up there. And so it's going to earn an interest at a fixed rate, most of the time set by the insurer. And your premiums should mostly stay the same within the lifetime of the policy. Those policies are really better for higher net worth individuals who want to diversify their investment portfolio with a low risk investment option. And so if you have a lot of money, you could consider a whole life, universal life, or variable life insurance. But if you don't have a lot of money and you have a simple family and you want to provide for them, term life insurance is your best bet. So before you even think about whole life and universal life, you should do your independent research to figure out if that's the best option for you and your family. And of course, you can get permanent life insurance. Permanent life insurance is like term life insurance. You get a set amount. However, permanent life insurance is permanent. It's not a 10, 20, or 30-year policy. It's for your lifetime. I believe it's up to 105 years old or 110 years old. There is a limit depending on the policy, so check it out. It's not like if you live 130, which you probably won't, but in case miraculously you do, then there is an age cancellation limit on that. So check out that permanent life insurance terms and conditions before you buy it. Permanent insurance is more expensive than term life for that reason, because it's a longer period. So make sure you look at the premiums and see if it makes sense in your overall financial picture. So those are the common types of life insurance policies. Now, where can you get life insurance? You can get it with a financial advisor. You can get it directly from a traditional insurance company, or you can get it online. You can get it at ladder.com and ethoslife.com. Those are two very competitive life insurance companies that have really good rates, and you can most likely get it within minutes. You don't need to do blood tests. No nurse needs to come to your house to check on you. And so they make it very easy for you to get term life insurance. So check out those two websites. I do have a policy at ladder.com, and it's wonderful. So check that out. But before you dive into more complex types of insurance policies, you should talk to a financial advisor. Figure out what's best for your family to decide if the other types of insurance is good for your family. Okay, so whatever insurance policy you do get, make sure you put a beneficiary on it. A lot of people, they buy it and they have no idea who they want to give it to, and they say, I'm going to get back to it later, but they never do, and they pass away and there's no beneficiaries. That money ends up in probate, which is not good. Okay, or it could go to someone that you never intended it to go to. So make sure you always look at your beneficiary designations. If you have an insurance policy right now and you have no idea who's on it, or if you're not 100% sure, contact your insurance company and get the beneficiary designations to double check. Okay, so that's my recommendation. Now, if you want to learn how to make a living trust for your family and to put the life insurance into your living trust, I recommend that you check out my free trust class at freetrustclass.com. I show you the whole process of how to make your own living trust the right way. So I give you a really nice overview of how to do it correctly. A lot of people just do it so quickly and they don't understand that it's a process, and there's certain things that you have to do to make sure your trust works when you pass away. So I give you a really nice overview of the process. That class is about an hour. It's absolutely free. And at the end of the class, I introduce you to my Living Trust course that you can enroll in for a small fee. That's where I take you through step by step how to make your own living trust, from planning to drafting the documents to transferring assets like life insurance into your trust, and transferring your house to your trust, for example. I walk you through that whole process step by step. So if you want to learn the whole process and to make sure that you don't make any mistakes, check out first my free trust class, learn the entire process, and if you want me to walk you through it step by step, I do have a video based class that you can follow along in my recorded videos to help you make your own living trust with confidence. All right, so I'm not here to sell you my legal services. My number one goal is to make sure that you keep more money in the family and get that peace of mind that you're looking for. One of my clients, we're working on their estate plan right now, and then they asked me, how fast can you get it done? And I told her how fast it could be. It's gonna be 4 weeks. And she said, okay, because I really want that peace of mind just in case something happens to me and my husband. I want to make sure my kids will be okay. No assets end up in probate, and they'll be able to receive everything very easily. And so I know a lot of you are going on vacation, and some of my clients are going on vacation soon, and they reach out to me and they want to get their estate plans done. So get that peace of mind, do it yourself, or hire an attorney to do it for you. You have many options. Now, before we go, I want to share a Bible verse with you. This is from Proverbs 21:17. Whoever loves pleasure will become poor. Whoever loves wine and olive oil will never be rich. So what does this mean? I'm not telling you to not seek pleasure, or I'm not telling you to not drink wine or drink olive oil. But what this proverb is saying is, make sure that you get your priorities straight. Okay, if you're thinking about getting life insurance, especially when you're a young family, however, because of your quote-unquote budget, it's too expensive for you to get life insurance or a simple term life insurance, think about what you're using that money on right now that is actually not good for you or is not beneficial for your family. For example, a simple term life insurance could be as affordable as maybe $20 a month, $30, or even $50 a month, which is still very affordable. And you say to yourself, oh, it's too much. But are you spending what, $15-$20 on Netflix, on watching shows that really doesn't feed your soul and absolutely doesn't provide for your family? Are there any other subscriptions that you have right now that really doesn't add value to your life, but it's a distraction for you to feel a sense of, worth or a sense of happiness, but it's not really true happiness? When we focus on the wrong things, we're not going to have a budget to focus on the important things, like providing for our families, making sure that our families are protected, and what's going to happen if I die early? Is my spouse or my kids going to be okay financially? So we have a duty as parents, as spouses, to take care of our families. So really look at yourself. Are you focusing, are you spending too much money on things that you don't really need to spend money on? And so my suggestion is for you to really understand what matters most and to invest the money on the things that truly going to give you peace of mind, joy, as well as protection for your family. Okay, so this is a wonderful proverb from chapter 21, verse 17. Whoever loves pleasure will become poor. Whoever loves wine and olive oil will never be rich. You know, uh, God gives us these words to really stop us and to really help us examine ourselves. And sometimes He would use language like this that's like so crazy, and to our fleshly selves, we're like, I don't want to live like this. I want pleasure. I want wine. I love olive oil. But God's not telling you to sell everything and live on nothing. In fact, God does want to bless us, and God does want us to enjoy life. But if our enjoyment of life, if our feeding of our fleshly desires is stopping us from being responsible or from taking care of our family, then we've missed the point of life. So I pray that you will experience the goodness of God, the wisdom of God. Read Proverbs, everyone. Proverbs is such a beautiful part of the Bible that most people ignore, even Christians. So check out Proverbs. Even if you're not Christian, I recommend that you check out Proverbs. It's really going to add to your life. It's going to give you wisdom, because this is wisdom from our Heavenly Father, the creator of the universe. So check out Proverbs, especially the first Proverbs. You're going to love it. So check out the first Proverbs. I encourage you to do that today. Just type in Proverbs chapter 1 in Google, and you're going to experience the wisdom of God and also the love of God. You know, God is here to give us this beautiful book called the Bible in order to speak to us, in order to draw us near Him, and in order to show us that He loves us. Because God does not want us to live life alone. He wants to live life with us. He's given us the instructions of life. Family issues, financial issues, work issues, relational issues are all there in the Bible. And so I encourage everyone to experience God through the Bible, through prayer, and it's going to add so much to your life. So God bless you all. Have a wonderful, wonderful evening or day wherever you are, whenever you're watching this. If you have any estate planning questions, please ask us in the comments below. We can't promise that we're going to answer those questions, but these questions really help us make these types of videos. And also, we're going to start a weekly live Q&A where I'm going to hop on YouTube live and answer some common questions that people have like these. And so stay tuned. Please subscribe to this channel so that you can get notified whenever the live Q&A starts. All right, God bless you. I will see you in the next video.